I'm anxious to get your thoughts on cryptocurrency, but first I want to start with the big picture because you have such a unique view into the health of consumers and spending trends. What trends are you seeing in consumer spend, and what does that tell you about what's to come later this year as we come into a new normal?
Hey, Emily, good to talk to you. That's a fantastic question and one that we're being asked all the time. As you can appreciate, going through 12 months of COVID, there's governments, there's businesses, there's bankers, everybody really wants to understand how the pandemic has hit the economy, how has it hit their business, what it means for consumer expectations, and so forth. So it's a question that we invested a lot in. We have all sorts of data, as you can appreciate. I would describe our business as a bit of a seismograph on what's going on around the world. What I'm seeing in terms of the trend is you look pre-pandemic, we're all engaged in e-commerce. None of that was new, but what we've seen during the pandemic is really a seismic shift in terms of consumer behaviors, because you had to shop online. So the rise of e-commerce has just dramatically accelerated. I think years of change have been compressed into the last 12 months. That's the first thing to say. But then you ask the question, what of that will really translate into muscle memory? What of that will stay? What makes a trend? So in order to get underneath that, we've done regular consumer research around the world and trying to augment our data pieces with what consumers are thinking as they look ahead. And here's what we've heard is, 2/3 of people asked in like 14 markets around the world is, I want to do more digital banking. I want to do more online payments because I learned to like it. And I want to use less cash. So that is the fundamental trend that's at work here. And the question then is, will that stick? What will happen? Is there a reversion to previous behaviors? And here, I'm convinced that once vaccines are rolled out, once travel restrictions are taken back, people will want to get out. They want to make up on lost time. You want to go and travel and see friends and family. You want to go back to the sports event. I think the NFL Super Bowl just recently probably triggered exactly that desire. So the way we look at the future is those good experiences that people learned about because they had to in terms of easy online checkout will stay. But reverting back to eating in your local restaurant, supporting your local shop, taking a trip, that's going to come back. I believe there's significant pent-up demand out there. We're ready to enable both in-store, online, whatever it is.
How important is the return of travel to Mastercard's growth?
Travel is a very important aspect of a business. We enable travel domestically, internationally. When you currently look at our card not present, i.e. the online spend, a significant portion of that is people booking trips on booking platforms, et cetera. But then there's, of course, the physical travel as well. So it's a significant driver of our revenue. It matters. We focused. We have a differentiated position there. We gained a leading position when it comes to travel card portfolios. Everybody knows co-brands. We are positioned very strong, and we continue to bet on the return of travel, not only because it matters, but it also matters to people.
Now, I got to ask you about the crypto news, and I want to start with the sand dollar. You're rolling out prepaid cards that can be loaded with the world's first central bank digital currency, the sand dollar of the Bahamas. You will be the only card that supports this. How much volume are you expecting here, or is this more of an experiment?
So the Bahamian government and the central bank there, they launched a central bank digital currency last year. It launched in October. And what is happening now is this is one of the first central bank digital currencies that are live out there. And we're basically providing an ability for a person, a business, anybody in the Bahamas that is owning that digital currency to transfer it into fiat, the real Bahamian dollar, i.e. physical Bahamian dollars, and start to use it on a MasterCard. That is nothing different than from various other such card programs that we have where other cryptocurrencies can be transferred into MasterCard to be used in the shop to buy a coffee, a pizza, whatever you want to buy with it. So it's not an experiment, it's real. What really is the distinction here, this is the first central bank digital currency that we will transferring into fiat currency versus all other programs that we currently have are actually private sector issued cryptocurrencies.
So what other central banks are you talking to?
There's a whole range around the world that we're engaging with. There was a group of central banks just recently putting out a paper on how central bank digital currency should work. Two-tier concept, making sure that there's a lender of last resort, and commercial banks are coming into the fold to making sure that you can actually effectively distribute this currency. So the leading 7 central banks around the world put together in partnership or with our input, rather, a statement on how that should be constructed. So at a given point in time, we have 10, 15 programs in different countries around the world supporting the implementation of such central bank digital currencies, including providing a test facility. So we launched a sandbox where governments can come in and invite banks to test how this will actually work. Because in the end, to bring a utility to consumers, you got to see what does the last mile do? How can I spend in a shop? And that's where we come in. And it was a big announcement that we made at our earnings call 3 weeks ago, where we said, okay, we will actually enable those central bank digital currencies in our network, just like fiat currency.
Now, you've also said you're going to start directly supporting some cryptocurrencies for use in payments later this year. Which cryptocurrencies are we talking about, and are we talking about Bitcoin?
Yes. So, Emily, that's an important question. Central bank digital currencies, the nature of that is they're essentially stable coins. They're backed by the country. There's private sector stable coins as well. They're backed by generally deposits. They're logged at commercial banks. That's a type of cryptocurrency that we believe in will bring utility from a payment perspective. We've not made any decision yet which one of those will be, but that category, private sector issued stable coins, is one that we believe will work. We put out principles to decide which ones in the end we will support and which ones not. And the first principle, of course, has to be regulatory compliance. There's this principle on consumer protection, like data privacy, for example. You want to make sure that what comes along with your crypto payment is really the data that only you understand to want to pass along. And then finally, there's an aspect of stability. And stability is guaranteed in the end through the concept of a stable coin, because it's backed by an asset. And here's where you come to non-asset backed cryptocurrencies. And you're talking Bitcoin, you talk a range of others. And right now, the lack of stability, fluctuation of prices make them not usable from a payment perspective. So here, there's a problem. Imagine you buy a pizza, and the pizza costs 10 units of a free-floating cryptocurrency, and the price within minutes fluctuates significantly up or down. Your pizza could have been worth $40 or $5. From a payment perspective, that is a problem. From an asset class perspective, that's not a problem. But we're not an investment company. We're the payment company, and we're guaranteeing a payment from a buyer to a supplier. So that is the issue there. What we're doing, therefore, is coming right back to the sand dollar and Bahamas, is we're enabling Bitcoin asset holders to say, you transfer, add an exchange at one of our partner programs that can you spend through our network.
So I just want to dig a little bit there on Bitcoin, because obviously your news about being more accepting of cryptocurrencies sometime later this year helped to send Bitcoin, the price of Bitcoin, up. We just spoke with Nouriel Roubini, well-known economist, who says it is pure speculative, self-fulfilling bubble. This is a pure speculative, self-fulfilling bubble. It doesn't have any income. What is your reaction to that, given what you just had to say about stability?
Yeah, Emily, my view is, I look at this question through the lens of a payment technology company. As I just laid out, it really doesn't bring much utility from a payment perspective because of the of fluctuations. From an investment and asset perspective, we're not an asset manager. I mean, that is people taking risk, and they're looking at this as any other asset class, and that is something that we really don't take much of a view on. I think it's important for us to say if people have invested and they want to transfer that into a network to buy something, buy a house with it, that we enable that, because in the end, we enable choice in payments. We don't really stand for cards. It could be real-time payments, it could be crypto, it could be anything for that matter. So that's our approach to this.
Now, I want to talk a little bit about some of your other priorities, because financial inclusion is one of them. You've got a new partnership with Jennifer Hudson. You've also got a new initiative to support Black-owned businesses and other small businesses. And I'm curious what trends you're seeing there among Black-owned businesses, let's say over the last year. Did they struggle more than other small businesses?
Emily, it's a fantastic question. You're putting a finger right on the problem. And I think what we've seen a dual crisis here. There's the public health crisis. But there's also a crisis of exclusion, of hitting minorities a lot harder than other parts of the population, and that played out in many markets around the world. So we clearly can say that small businesses are hit harder than larger businesses, no surprise, because their financial resiliency is of a different nature. And then you look at minority-owned small businesses, you see that even more pronounced. Black-owned businesses in the United States have been struggling significantly. It now has to be everybody's interest to make sure that they can stand up back on their feet and get back going. And here, in terms of the equal opportunity that needs to be created to ensure access to capital, to ensure that you can get your business online if you didn't have an online presence before, all of that is what we're trying to enable. We put a commitment out there of $500 million altogether to support the Black American community. A good chunk of that will go for small businesses. And, a partnership with Jennifer Hudson should help to really draw attention to the topic, draw in partners, because we can't do this ourselves. As a network, we have a lot of partnerships out there, and we want more partnerships to come on board. So it's a very important topic here in the US, but it's one around the world. In terms of SME support, generally speaking, look at emerging markets anywhere. It's the backbone of the economy. We put $250 million out there and say we want to get small business and help them go online and survive in this new digital economy and ideally thrive.